morning, traders. Welcome to the weekly Elliott Wave Street Update. I'm Juan Maldonado, and it's a pleasure to share with you some of our trading plans for this week. Let's start with a daily chart on the euro-dollar. On the euro, we're seeing a complex price action going sideways since November. And the plan from the Elliott Wave point of view is to have a price testing this area. It's around the 112.20. If price is able to move down to this area and reject, we're going long from this area. But there is also an alternative that actually will be better at this instance, and is having the euro making a lower low, and we can buy it from here. That would be fantastic. But something in common from these two scenarios is that we are looking for a leg down back to the 112.20, maybe 111.50 area. So on the lower time frames, what we are going to do, we're going to find the discount. The euro is selling off today strongly, but if we have a three-wave sequence up here, we want to sell it. And there is something else interesting. And last week, we were working with the plan of having the euro coming back to this area before moving lower. So let me explain. When we are doing Elliott wave analysis and we have a 5-wave sequence, then we expect a 3-wave sequence up before the continuation. But if the price moves down in a 3-wave sequence again, and especially if it moves above this pivot and then makes the retrace, we are going to know with a high probability that the corrective wave is not over and the price needs to come back to this area before going down. So this pattern is extremely important when you are doing Elliott wave analysis. So let's see it in action. We have a 5-wave sequence on the euro. We have a 3-wave sequence up. We have a 3-wave sequence down. And look, the price takes out this pivot. And we know with a high probability that after the retrace, it needs to make a hard high here. It needs to make a hard high here before showing the move down. Right? So we were warning our clients that after the price testing this area, we could start seeing the strong move down. So now that we have it, we are not going to sell it here, right? We need to have a discount in order to jump into the trade, because I didn't sell it here at the highs. I was looking for a smaller impulse and then the 3-wave sequence to go short, but look how well the pattern is working. Let's have a look at the S&P, then we are going to check the bonds, where we are going to make a special exercise, and then we are going to visit oil. So this is the S&P. The S&P has been selling off. We are in the discount. We are in the best place to plan trades because we are having a good price. So something that I was telling my clients today was to copy and paste the setup. We were able here to go long on the S&P after this green candle. This was our trigger candle, the green one. So we will go long here, and we were able to capture the whole move up. So now that we are looking for an entry, I was telling my clients today, okay, let's copy and paste this setup here in order to find the entry, right? So let's do the exercise together. Look, we have a leg down. So that leg down is going to be this leg down, right? Then we have a move up that here I was calling wave 4. So we need that leg up as well, right? Then we have a leg down here below the end of wave 3. So we need to have that leg down as well. Once we have the leg down and then we have a green candle that closes above this area, or rejects with a tail, but a green candle, demand, we can go long. And the target, the minimum target is going to be here, the previous highs. The plan is to capture all this distance with a small risk. We can have a protective stop, some points below the low, just in case the market needs to accumulate a little bit more. And then we are going to capture the move up. So it's a simple trading plan based on the Elliott wave theory, where we can have a really good profit this week. This is the 10-year bond. On the 10-year bond, we have been seeing the price accelerating down. So this is going to continue lower. When the bond is going down, the yield is going up. And that's telling that inflation is not under control yet. So I'm looking on the bond market before thinking on any reversal, the price to bounce a little for wave 4 and wave 5, and from there it could be interesting. But right now the bond is going down strongly. Today we're seeing the bond moving down strongly. So today in the membership, we did a special exercise about the different interest rates. So we have the 30-year, we have the 10-year, and we have the 3-year. As we can see, all of them are going up, but the Fed rate is lower. So, and the connection, the explanation, and the deep analysis on the bond market that we did today was to connect inflation with the Fed, that they are going to increase rates, right? Oil, and finally, after putting all the dots together on this fundamental scenario, we connected to the US dollar and what we can expect from these analysis in terms of Elliott wave, in terms of the yields on the US dollar. So this was a fantastic analysis that is available inside the members area. You can sign up right now for your trial in order to access this content. Trust me, is fantastic, because you are going to understand how we can connect the bond market to the forex market, or to the stock market, or to the oil market, right? Everything based on inflation expectations. So there in the membership you can find all the details. Let's have a look at oil. Oil equals inflation, and the plan here is to have price on oil moving a little bit higher to test this area, also to test clearly this area that we were already testing. And look, if we have a nice a supply, like a nice wave 1, and then a retrace here failing to continue higher, that's going to be the short trade, or an aggressive entry could be just here when the price returns and closes below this area. But a safer entry will be here after wave 2, and the target on oil is going to be here, the 63s, maybe lower, but this is going to be the start of something big. All right, traders, so that's the plan for today. If you want to find more about our membership, you can visit right now ElliottWaveStreet.com, where you are going to find all the details about our membership. Under the membership tab, you will find the plans that we have. We have the Forex plan, the stocks plan, or the full access plan. All of them come with the new Members Academy. That is a crash course on Elliott Wave. So if you are new to Elliott Wave, you're going to understand the basics and how to read the reports and how to understand the market cycles with risk strategies, with some basics, with some tactics, and we are adding lessons. So sign up for your trial. If you have any questions, let us know. Please have a fantastic start of your week. I'll see you soon. Take care. Bye-bye.